Okay, so in the previous sessions, we looked at or we explained the summaries of changes in ownership, where we looked at two different kind of changes in ownership: admission of a new partner and withdrawal of an old partner. Ne? And yes, on Wednesday, we also did liquidation of partnership. So today we'll be doing an exercise based on the admission of a new partner and also withdrawal of a partner, the one that was sent on the group just now. Okay, so let's quickly go through the question. Admission and retirement, which means withdrawal of a partner. So you are told that Tom, Dick, and Harry are partners in a partnership and share profits and losses in the ratio of 2:1:4, meaning Tom has 2, Dick has 1, and Harry has 4, ne? Respectively. So the following information has been extracted from the books of the partnership as at 30th June 2002. So we have our assets there and we have our equity and liabilities on the other side. So we are also given additional information. So number 1 says, on the 1st of July 2002, Harry decided to retire from the partnership and partners agreed as follows. Number 1, goodwill must be revalued at 42,000. From how much is goodwill now? It's actually 28,000. So you are told that it should be revalued to 42,000. The general reserve should be cancelled. The general reserve that was in the business of 56,000 should be cancelled. You are also told that other assets to be valued as follows for the purpose of his retirement. So your equipment should be revalued at 29,800 and your inventory at 136,000. And then C, on the amount calculated as owing to Harry, half will be paid out immediately. Remember then we said that when a partner is retiring, he needs to get his capital share, his interest share in the partnership back. You understand? By drawing up your capital account and then calculating the total capital or the total interest that certain partner has, and he will be paid. The partnership will have to pay him back his total interest in the partnership. So in this case, you are told that, okay, of the amount calculated as owing to Harry, half will be paid out immediately, while the other half will be transferred to loan account, meaning that it will be like a loan. He gave a loan to the partnership. So this loan will be repaid over a period of 2 years. And the last one is Harry's interest will be taken over by the remaining 2 partners equally. His interest of 4, remember Harry has interest of 4 over 7, right? So that 4 will be divided among the 2 partners, the 2 remaining partners equally. Okay, so we go back to our summaries. We spoke of the different accounting records you will be expected to do during withdrawal of a partner. So who can tell me, who still remembers the different records, the different accounting records you need to do during withdrawal of a partner? Anyone? What kind of recordings do you need to do? Who still remembers?
A capital account for the partner who withdraws.
First, you need to calculate the capital account of the partner who withdraws. What else? What else? Or what is the partner entitled during his withdrawal? What type of interest is he entitled to get during the withdrawal, during his withdrawal?
Goodwill.
He's entitled to goodwill.
General reserves.
General reserves, if there are any.
Equipment, maybe, if they decided to give him a share.
Yeah, the correct thing is the correct word is revaluation, gains or losses on revaluations of assets. What else? Is there anything else? So if you go back to your previous or to your summaries, says that a partnership is entitled to be paid his share of the company of the partnership interest. Now his share of the partnership interest consists of the capitals of the partner's capital account amount, the current account, any reserves if there are any gains or losses on the revaluation of assets, value of goodwill as agreed between the partners, a charge against the retiring partner for any assets taken over, and also other costs incurred in the changes in partnership. Okay, so those are the interests, or in other words, those are the accounting records that you always need to do, or that you always need to calculate during the retirement or withdrawal of a partner. Okay, so given now the exercise, during now the exercise, sorry. Now let's record number 1. You are asked to prepare the journal entries in the books of the partners. All amounts should be rounded off if there are any. So first you are going to start off by journalizing all entries based on the retirement of the partner. And then when we are done, we move on to journal entries based on the admission of a new partner, because the new partner was admitted after Harry's withdrawal. Okay, so I hope you can all see the screen. So I'll quickly draw up a general journal. So this is question 1, Harry. Under withdrawal and admission, of a new partner. Okay. Okay. So number 1, so let's go back to our question. Let's go back to our question. We are told that letter A, goodwill must be revalued at 42,000. And then the general reserve is to be cancelled What does this mean? Remember the general reserve, we said that this is money reserved, like when you make profit, you don't share the total profit made. So you need to keep a certain percentage of your profit in the business. Then you share the rest among yourselves as partners. So that money that you keep aside are called your general reserves. So we are told that because of the withdrawal of a partner, that general reserve, those profits that were kept aside, need to be divided among the partners, need to be cancelled, meaning you need to divide it among the partners. Are we together? Okay, so we are going letter by letter. So the first thing, yes?
Is the general reserve the same as retained profit?
Is a?
The general reserve, is it the same?
No, it's retain profits. Okay, general reserve is kind of like broad. Retained earnings is an example of general reserves, especially when you deal with companies. But however, in the partnership, I would say that partnership general reserves is the same as retained earnings, only in the partnership. But then when you go to companies, you'll see that general reserves has a lot of different accounts that falls under it. And retained earnings is one of them.
So general reserves is usually a credit, but when it needs to be cancelled, you debit it.
When it needs to be cancelled,
yeah.
When you're canceling general reserves, you need to credit. You need to credit your partner's capital accounts. Why? Because you are paying them. That is the profit that you are sharing. And when you share profit, you credit your capital accounts because they are increasing. It's a profit made. Do you understand?
Yes.
So you need to credit your capital accounts. Okay. So withdrawal. So the first one, we go letter by letter. First one is goodwill. We are told that goodwill must be revalued at 42,000. So currently, if you check in your statement of financial position, currently goodwill is 28,000. Now it should be revalued at 42,000. And what did we say about revalue of assets? When you revalue your assets, what you divide, what you share among your partners is the difference between the two amounts. The increasing or the decreasing of your assets or liabilities. That is what you divide among the partners. You do not divide the new carrying amount of the assets, but you divide the difference between those two amounts. For example, now in goodwill here, you have 28,000, and then you are told that it must be revalued at 42,000. So what is the difference between 28 and 42? The difference is 14,000, meaning that that 14,000, it's an increase. You understand? Your goodwill has increased. What type of account is goodwill? Goodwill is an intangible asset. And what did we say about assets? When assets increase in value, that's kind of like a gain. You made a gain. And a gain is the same as a profit. Therefore, you need to credit your partner's capital accounts. Are we together? Do we understand?
Yes.
Okay, so we
Yes.
have goodwill. Remember, this is debit. These are general. We have debit side, and then we have credit. So we need to we need to share the real value, the difference between the two amounts of goodwill among the partners. So we'll have to debit goodwill. So goodwill of how much? How much are you getting? 42. What is the increasing amount? By how much did it increase with? With how much?
14,000.
With 14,000. And that 14,000 should be divided among the three partners based on their profit sharing ratio. I think there's some noise on the background. I'm not sure who it is. Please just mute yourself if there's noise on. Okay, thank you very much. So we need to share the 14,000 among the partners using their profit sharing ratio. So we are told that their profit sharing ratio is 2, 1, and 4. Tom, meaning that Tom has 2. So this is Tom. He has 2 over 7. How did we get 7? It's 2 plus 1 plus 4. Their total is 7. And then who is next? Dick is next. So Dick has 1 over 7. And then the last one is Harry, who is withdrawing with 4 over 7. So everything will be shared among their profit, among this profit sharing ratio. Okay. So let's move on. So Tom, how much will Tom get? So we have Tom here. How much will Tom get? 14,000 multiplied by 2 over 7. What is Tom's share of the goodwill?
4,000.
14,000, right? Sorry, I mean 4,000.
Yes.
4,000. And then we move on to Dick. Dick has how much?
2,000.
And this is capital. So their capital accounts. You said Dick has how much?
2,000.
So Dick has 2,000. And then Harry has
8,000.
And then Harry has 8,000. And together it will give you 14,000. Okay. Are we good so far? Can we move on, or are there any questions?
No.
Okay. If there are no questions, then we move on to the next point. We are still at 8. The general reserve is to be cancelled, meaning that we need to share the general reserve among the partners. What is the amount of the general reserve? We are told that it's 56,000. So in total, they have 56,000 general reserves. So we need to credit our partners' capital account. Why? Because those are profits. So when partners share profits, their capital account is credited. And when it's losses, when there are losses, their capital accounts are debited. Okay. So the second one here is general reserves. So we debit the general reserve account with how much? With 56,000. Okay, and then we credit our partners' capital accounts So we have capital Tom. So how much will Tom get?
$16,000.
So Tom, again, remember we are using the ratio. So 56,000 times 2/7. And then you get how much?
16,000.
Then you get 16,000. And then we move on to capital Dick. So capital Dick, so how much will Dick get?
8,000.
Dick will get 8,000. And then we move on to Harry. How much will Harry get?
32.
32,000. If you add them together, they'll give you 56,000. So Harry will get 56,000 times 4/7 will give us 32,000. 56,000 times 1/7 will give us the 8,000. And 56,000 times 2/7 will give us the 16,000. Take note of that. Okay, so we are continuing at letter B. Or are there any questions before we continue with letter B?
Yes.
Yes.
Is the general reserve always debited or what?
Okay. Yes. That it actually depends. Now we are busy canceling off the general reserve. Eh? When you are told that, take note of this. When you are told that general reserve is to be cancelled or general reserve is not to appear in the books of the new partnership, then you know that you will have to credit your partner's accounts and then you debit your general reserve. So on the debit side, you have general reserve, and then on the credit side, you have capital, the capital accounts of the three partners. Are you together? However, if you are told that general reserve is to appear in the books of the new partnership, then it will be the opposite. You will have to debit your capital accounts. But let's, did I answer your question?
Yeah, you did.
Okay, so we actually just have less than a minute. I don't want us to continue with B. We only have less than a minute. So I'll quickly end this meeting and then restart. So we continue with letter B, revaluations of assets. Let me just end the meeting.